So we're still gonna just wrap up real quick these last two pieces of chapter 1. I know some of you have some questions on chapter 1 homework as well, which I want to go ahead and answer some of those questions for you, and then we will get started as well talking about chapter 2. There's some, anybody want some suckers? Anybody? Okay. Keep you awake. Go ahead. Share them around. Lisette, did you want one? Come on back. And Cade, help yourself. You guys are all spread out, so it's hard to put them in just one place. But so this appendix, so obviously we get our rules, our tax rules from someplace. Right? Somewhere there has to be these rules written down. We have actually 3 different sources of rules for taxes. And this is actually pretty consistent throughout all statutes, all laws and everything. We have these 3 statutory sources, administrative sources, and judicial sources. So statutory sources are things like the actual law. The ultimate law that governs our tax laws is the U.S. Constitution. So 16th Amendment to the U.S. Constitution says that Congress has the right to levy taxes based on income from whatever source derived. And that essentially gives Congress the ability to make any types of tax laws. So the laws that they make come from, you remember that cartoon? You guys are probably too young for this. The cartoon, what was it? I'm Just a Bill. It would go through, when I was a kid, they had this Schoolhouse Rock videos that would, okay, I'm seeing a nod, it was this video that explained to you the process of making laws in the United States. And so, just like any other law that is made in the U.S., tax law has the same sort of process. So everything starts in the U.S. House of Representatives. A tax bill is introduced. It may be actually originally introduced by somebody else, like the president may have an idea on a tax law that they want, that he wants. Somebody in the Senate may have an idea, but it has to originate, the original bill has to originate in the House of Representatives. So that's where all of it starts. It goes through all of its, their gyrations, the different committees that have to approve it and decide what they're going to do with it. Ultimately, if it gets passed out of committee, then it goes to the greater House of Representatives. They vote on it. If it gets passed out of there, then it goes to the Senate. Senate does the same sort of thing. So they'll have their conference committees if it passes out of the Senate. And of course, the House and the Senate will have oftentimes these bills will be different in certain ways. And so the 2 bills have to pass both the House and the Senate and agree. They have to be exactly the same bill. So it may go back and forth between the House and the Senate. Ultimately, if it passes both the House and the Senate, it's either signed or vetoed by the president. And then if it's signed, it gets incorporated into the Internal Revenue Code. It becomes part of the statutes of the Internal Revenue Code. The Internal Revenue Code, otherwise known as the IRC, because we like to abbreviate everything and have acronyms for everything, has different subtitles within it. So this is the Revenue Code. So this is everything related to the generation of revenue in the country. The very first subtitle is Subtitle A, Income Taxes. That's what we're talking about in this class, our income taxes. Now you can see there's all different types, though, of sources of revenue. So we've got excise taxes, alcohol and tobacco taxes, estate and gift taxes, employment taxes. So all these different subtitles pertain to some different type of taxation. But what we're concerned with is Subtitle A of the Internal Revenue Code, which is income taxes. So a bill passes, it gets incorporated into the statutory authority, but oftentimes what happens is that bill, the wording of that bill, is not really that very clear. Like, there are lots of nuances with it. And in order to interpret those nuances, we have what are called administrative sources of authority. Whoops, there's different types of income. Administrative sources of authority. Now, this is where the Treasury Department, which is the IRS is under the Treasury Department. The Treasury Department then interprets the law. They say, this is what Congress meant when they passed this law. So they get to interpret all of that. And there are lots of different types of publications that come out that interpret the laws. We have IRS regulations, so Treasury regulations come out. So this is, and these are all, they have different strengths of authority. And by authority, it's if they were challenged in court, what would be substantive enough to come in as authority to prove your point, to prove whether or not the position that you're taking on this particular law is accurate or not. So IRS regulations are the strongest type of administrative authority. The ultimate authority is the statutory authority, so the laws and the Constitution. Then we've got administrative authority. These are regulations. So this is the IRS's direct interpretation of the code. And there are 4 different types of regulations. So legislative regulations, general or final regulations, temporary regulations, and proposed regulations. So the legislative ones, these are regulations that have been mandated by Congress. Congress has told the IRS, you need to write this regulation. The legislative regulations take the place of the code and have the full effect of law. So this is where Congress tells, and every time a new law is passed, they will say, IRS, you need to make regulations concerning this new law that has been passed, and that's a legislative regulation. General or final, this is the IRS writes these under their general legislative authority. This is their interpretation of the IRC. It could be challenged. People could say, no, I don't agree with you, IRS. I think you're wrong. And people do all the time. They take the IRS to court. And most times the IRS is going to win, but not always. They don't always win. These help to interpret the law as well, but these are not legislative. They've not been mandated by Congress to make these regulations. Temporary regulations are like general regulations, but they expire. So it's just a temporary kind of a stopgap. This gives taxpayers immediate guidance related to a new law. So a new law comes out, and of course we just had a new law come out, and taxpayers don't quite know how it's supposed to be treated, like this, no tax on tips. Well, what does that mean? How are we supposed to deal with that? What is exactly tipped income? What isn't tipped income? The IRS will write temporary regulations so that in the immediate aftermath of passing the law, the taxpayers have some sort of guidance on how to treat these new regulations. But they're only for 3 years while they're writing permanent regulations, while they're writing the legislative. Proposed regulations don't have the effect of law. They write these during the hearing process leading up to the general regulations. So these are what the IRS is proposing to be the regulations, but you can't really use these in order to defend a particular position. So different types of regulations that the IRS issues. And then we also have revenue rulings and procedures. So they're more like sources of information for taxpayers, not as authoritative as the regulations are. So the IRS is reacting to an area of the law that's confusing in one of these rulings. So some area has become, people just, there seems to be a lot of confusion about what the proper way of interpreting a law is. And so what the IRS will do is they'll address that directly. So it's not like an overarching regulation, it's more specific. If taxpayers have requested additional guidance, the IRS may issue these rulings, and then procedures are proactive. So the IRS will give an illustration of how something should be treated, kind of before some of the issues come up. These are not really authoritative, they're just sort of how-to guides for taxpayers. Pronouncements, these are things like private letter rulings and IRS notices. These are very specific forms of guidance. A private letter ruling is something that is requested by a taxpayer, that they want the IRS to tell them specifically how they have to handle this situation before they take a position on their tax return. So, and you have to pay the IRS to do this. So it's only, their ruling only pertains to that particular taxpayer. It does not pertain to taxpayers in general, but it can be used as guidance. So if you have a similar situation, you could look at private letter rulings to say, okay, well, you know, my situation is relatively the same. I'm going to use this as guidance to guide me into how I treat this particular tax situation. Also, when there's a change, so for example, change to the standard mileage rate during the year, IRS is going to issue a notice to publicize the change. They issue notices all the time to update for like the tax brackets. Every time the tax brackets are updated for the new year, there'll be an IRS notice that is issued. Anytime that some cutoff is indexed for inflation or changed, they'll issue an IRS notice. It's just to tell taxpayers, hey, FYI, this has changed for this year. Okay. The last form of authority is judicial tax authority. So this is where somebody has challenged, a taxpayer has challenged the law in some way, or challenged a regulation that the IRS has issued and has gone to court over that particular area of tax law. Again, judicial authority is authoritative, but it really only pertains to the specifics of that case. So, for example, if somebody, there was a law, I mean, there are tax cases all the time, but there was a case, let's see, it was years and years ago, this was when I was in graduate school, where it was challenged, the concept of head of household was challenged, and defining what a household is. Like, is a household a completely separate building, or could there be multiple households in one building? And a taxpayer argued that there could be separate households in one residential unit. So, you know, one household could be occupying these 2 bedrooms, and another household could be occupying these other 2 bedrooms, and then there's shared space in the living room and kitchen between the 2 households, defining exactly what a household is. That went to court and was determined that you can have multiple households in one building, in one kind of living unit. The IRS had taken the position that nope, it's household is one building, it's one housing unit. But it went to court, and the court decided nope, it can be separate. It just depends on the facts and circumstances of how those households are set up. Now, this becomes important because if you have more than one person in that housing unit claiming head of household status, then you've got it's a conflict. The IRS said, no, only one of you can be head of household, but it went to court, and the court decided, no, you can have multiple households in that housing unit. So you can use that court case to then justify why you, as a taxpayer, a different taxpayer may have a separate household within a particular housing unit. So that went to court. IRS lost that one. Like I said, IRS sometimes loses. Judicial authority is strong authority, but again, all the facts and circumstances have to line up. So if you have like one little fact that is different from the original case, it may not hold up. But this is just another type of authority. And there are different courts. So we have a specific tax court because not every judge is versed in tax law. Tax law is kind of its own area of law. Some cases will go to district courts just under, judges that have generalized knowledge, but there is a separate U.S. tax court where the judges specifically deal with tax law. That's their area of expertise. But just like any other federal case, there's an appeals process, but everything starts with the district court and then goes to the U.S. Court of Appeals, and they could ultimately be decided by the Supreme Court as well. So it just like any other type of challenge to a federal law. Oops. Okay. So those are the different types of authority.